Welcome everyone to Vested Interest. This is Shane. In this video, we are going to cover the four stocks I'm going to be buying in May. We're going to look at Lam Research, Cisco, Occidental there, Petroleum, Comcast. Let's get into the video. Now, before we get too far into the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever I put out any new content. I do this video series where we look at the stocks I'm looking to buy in the upcoming month. I think we're in the first day of May already, so you'll get this on May 1st, the morning of. Where we look at the stocks I'm willing to buy in or looking to buy in the upcoming month once a month, obviously, and then I do a stock pick of the day video series Monday through Thursday when the market's open. We take a look at a stock that's pulled back on the day, run it through my screener, see if it makes it on my watch list. If you're interested in that type of content, hit that subscribe button, click that notification bell, share the video with anyone that you think that might find value in the content. Special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you. Let's get to 2,000 subscribers, over 1,000 now. On to 2,000 we go, and there is the thanks button down below for anyone who might want to buy me a cup of tea. All right, first up on the list, we are going to take a look at Lam Research, ticker LRCX. This is out of the information technology sector. All of these numbers will be as of April 30th. That was yesterday. Again, you'll get this out on Thursday morning. It should be around 8:30 whenever I push this out. Closed out the day at $71.67. Looks like they were down a little bit lower in the after hours. Now, earnings per share is sitting at $3.59 per share. Their current price to earnings ratio is $19.97 per share. Forward PE a little bit lower than that at $17.42. Dividend is 92 cents per share. They are a quarterly payer, so divide by 4 if you want to know what that looks like. Starting dividend yield of 1.28%. Ex-dividend date March 5th. They did pay out on April 9th. So you wouldn't be in, or you would be in line for the next dividend if you bought them now, but you're going to have to wait a couple months. We're just entering May here. 52-week range as low as $56.32, as high as $113. So it does potentially have some further to drop, and I'm going to be buying this one in the low 70s, 60s. If it drops in the 50s, buy some more there. Anything under my cost basis, which as you can see here down below, is $72.92. So anytime it's under my cost basis, this is a buy for me, and I don't mind bringing my cost basis down on this one as it drops, if it continues to drop. A beta of 1.53, so this one is more volatile than the overall market. I am using that volatility to my advantage, right? So I'm waiting for it underneath my cost basis. That's whenever I want to buy. They do have a price target of $92.75, so don't see it quite getting back to its 52-week high, at least according to stockanalysis.com, where I pulled this from, and that would represent a potential 29.41% increase from where it currently sits. Earnings date, April 23rd, so we're just past that. You can check out their earnings call if you would like to. Ex-dividend March 5th, I think we mentioned. They paid out on April 9th. Now, jumping, this one did, rise over the day there on Wednesday. Looking over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 1.1%, compared to its current 1.3%. I know it's over here, 1.28%. This is from stockanalysis.com. This is from Yahoo Finance. So it's a little off, and it may have been, pulled at slightly different times. But 1.28 to 1.3, very, very close numbers there. Either one puts them potentially undervalued according to dividend yield theory. Now, the payout ratio is very low at 24.79%, so plenty of room to continue to grow that dividend, and it does not appear they are in danger of a dividend cut anytime soon. Now, if you wanted to look at return on equity, it's at 53.14%. If you wanted to look at return on invested capital, that's 24.49%. I am using return on capital employed. I like 10% or better. 36.54%. That is smoking high. Anything over 10% is good. Anything over 20% is very good. This is excellent. EPS growth is another one I like to look at. I like 5% or better forecasted over the next 5 years. They're sitting at 16.51%. Again, very good number. Revenue growth, double digits as well, 11.02%. Free cash flow, I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, hold some of it on the balance sheet as cash if they want, buy back shares, pay a dividend, which this company does, and raise that dividend over time, which is what I want as a dividend growth investor. So you can see here, going back to June 2022, $2.5 billion in free cash flow, big jump up in 2023 to 4.6, looks like a slight drop in 2024 to 4.2, and in the trailing 12 months, looks like they're continuing that nice steady pace at 3.7. We'll have to see how this rest of this shakes out. Keep in mind the trailing 12 months includes, January, February, March, April of 2025, but then 8 months out of 2024. So we're not sure exactly what that'll be until we get a full year's worth of data. Now, they are repurchasing shares here. You can see going back to, again, June 2022, 3.8 billion pulled out of the market. 2023, 2 billion. 2024, 2.8 billion. So even though it looks like there was a drop in free cash flow from 2023 to 2024, they also increased their repurchase of shares. So it looks like that would offset that decrease in free cash flow, though you would have to do the math on that, seeing when they bought it and how much they bought it for per share. Repurchase of shares, they're continuing that trend at 2.5 billion in the trailing 12 months. But again, we don't know how much of that buying was from last year or how much it is so far in 2025 until we get all of 2025 numbers. Now, again, I am long Lam Research. I currently have 272.03903 shares. My cost base is $72.92. I am down slightly, 1.71%. Right? It's currently a little bit lower than my cost basis at 71.67. So I am going to be a buyer of this one whenever it is below my cost basis, and probably not a lot, but 1, 2, 3, maybe 4 shares here and there. To continue to bring down my cost basis and add to this position. It's a pretty nice position currently at $19,497.04. That's what it's currently worth. I have $19,836.75 into it. Again, down slightly if I was to sell it now. All right, next up on our list, Cisco, ticker SYY. This is out of the consumer staple sector. Closed out the day on April 30th at $71.40 per share. Earnings per share at $3.88 per share. PE ratio, current one at $18.42. Looks like their forward PE is projected at $15.57. Again, most of these have a lower forward PE, so they do see their price earnings coming down a little bit. Dividend yield is $3 or 3.03% and a dividend payout of $2.16 per share. They are quarterly payers, divide by 4 if you're looking for that number. Ex-dividend date was July 3rd. They paid out on the 25th, or they're going to pay out on the 25th. So you would be in line for that dividend payout right now if you bought them, but you're going to have to wait a little bit to get it. 52-week range as low as $67.12, as high as $82.23. So they are, closer to the 52-week low and not as far to drop if they were to drop further as Lam Research on the previous page. A beta of 0.81, so they are less volatile than the overall market. Analysts do call this a strong buy. Price target of $82.54, so they don't see it quite getting, they do see it getting a little bit over their 52-week high there, which would represent a 15.6% increase from where it currently sits. Earnings date was April 29th. You can check that out. So it looks like they reported that out a couple days ago. Go check that out on their homepage if you're interested in that. Looking at dividend yield theory again, we look at their 5-year dividend yield average, 2.57%. Compare it to their current 3.08, 3.03, same number. I know they're slightly off, but that could be just pulling them at different times in the after hours whenever I pulled this information. But either one puts them undervalued according to dividend yield theory. Payout ratio, again, low, 52.05%, much lower than the 75% or lower that I look for. Return on capital employed, 21.18%, much higher than the 10% I'm looking for there. Return on equity, if you like that one, 93.61. Return on invested capital, 13.83. So all numbers look pretty good on this one. EPS, earnings per share, 13.39%. I'm looking for 5% or better, so beats that metric there with revenue forecasted at 4.89%. Very good numbers overall on this one. Going back in time, we're going to look at free cash flow. June 2022 here, $1.1 billion, up in 2023 to $2 billion, up again in 2024 to $2.1 billion, trailing 12 months at $1.8 billion. They are also repurchasing shares, $500 million in 2022, $500 million in 2023, $1.2 billion in 2024. It looks like they're maintaining that so far, at least into the trailing 12 months, but we don't have a full year's worth of data yet to look at. Another one I am long at here, you can see I have 153.63726 shares. I am up slightly, 2.46%. My cost basis is $69.69. So I would like this to drop back into the 60s and be under my cost basis, but really this is one I've been buying slightly over my cost basis recently. Anything under around $72 or lower, I have been buying this one. Again, even though it's a little bit above my cost basis, I think it's fairly valued right now around $72, even slightly undervalued, really. Next up on the list is Comcast Corporation, ticker CMCSA. They closed out the day April 30th at $34.20. Looks like they were down slightly in the after hours. Don't know where exactly they ended up, but I was pulling this information around 7 o'clock on April 30th, 7 p.m. So you're going to get this video again May 1st in the morning. Earnings per share, $4.07 per share. Low PE ratio on this one, currently at $8.41 per share, even lower projected at $7.73. Dividend is $1.32 paid out annually, divide by 4. Again, they are a quarterly payer. This one does have the highest dividend yield, starting dividend yield at 3.86%. Ex-dividend date was April 2nd. They paid out on April 23rd. So again, you would be in line for the next dividend, but you are going to have to wait a few months to get it. 52-week range as low as $31.44. So this one's pretty close to their 52-week low, a high of $45.31. A beta of 0.94, so just slightly less volatile than the overall market. Analysts do call this a consensus buy. Price target estimated at $43.84 would represent a 28.19% potential increase from where it currently sits. Earnings date also has already passed. It was on April 24th, so check that out if you want to. Looking at dividend yield theory again, 5-year dividend yield average of 2.48%. We compare it to its current 3.89, over here 3.86, very close. Both of them would say potentially undervalued according to dividend yield theory. Another one, very low payout ratio, 31.03%. Again, much lower than the 75% or lower that I look for. Now this one, I will say, as far as the return on capital employed, I like 10% or better, so they are a little lower than that on this one at 6.93%. I'd like them to get a little better in this metric here. Earnings per share, EPS, is above the 5% I'm looking for there at 7.93, with revenue growth forecasted at 1.44%. Again, going back to free cash flow, we want growing free cash flow over time. So going back to December 2022, $12.6 billion in free cash flow. 2023, $12.9 billion. 2024 looks like a slight drop to 12.5, and it looks like maybe they're back on track over the trailing 12 months, but again, not quite even 2 quarters yet in 2025, so we don't have all the numbers yet for 2025. Repurchase shares, they are repurchasing shares, $13.3 billion in 2022. They actually decreased it over the last couple of years, 2023 to 11.2, 2024 down to $9 billion. So there is decreasing free cash flow here. You know, if you look at both their free cash flow and their decreasing in repurchase of shares, definitely in 2023 and 2024, it looks like they had some decreasing numbers. Again, I'm long on all of these positions, so another one I have a stake in, 313.22794 shares. I am down 13.24% on this one. My cost basis is $39.42. I have been adding to this one, trying to bring my cost basis down while this one is pulled back. I have $12,347.71 into the position. It's currently worth $10,712.40. So another one, anytime this is under my cost basis, I'll be looking to add to this one with some capital. All right, last on our list is Occidental Petroleum, ticker OXY, out of the energy sector. Closed out the day at $39.41 on April 30th there. Looks like, again, they were down slightly in the after hours. Earnings per share, EPS sitting at $2.44 per share. Price to earnings at $16.12 per share. Again, forward PE lower than that at $13.95 per share. Current dividend payout, 96 cents. They are quarterly payers, so divide by 4. Dividend yield starting at 2.44%. Ex-dividend date was March 10th. Looks like they paid out on April 15th. So another one, you would be in line for the next dividend if you were to buy them now, but you're going to have to wait a few months to get it since they just paid out in April. And we are just in day 1 of May. 52-week range is low as $34.78, so they are pretty close to their 52-week low, though they could drop a little bit more. High of $65.99. A beta of 0.81, so less volatile than the overall market. Analysts call this one a hold. Price target of $52.28, which would represent a 32.66% upside. I am not holding. I am going to be buying this one while it's under my cost basis. Jumping over here again to the dividend yield theory, 3.10%. We compare that to their current 2.44, or over here 2.38. And this actually speaks to potential overvaluation, at least right now, according to dividend yield theory. Payout ratio, again, very low, 38.94%. And another one whose return on capital employed is a little bit lower than I'd like at 6.93. I want them to do better on this metric. EPS growth is forecasted at 16.15%, so that's much higher than the 5% or better I'm looking for there, with revenue growth forecasted at 11.52. So good numbers there. I just wish they'd get a little bit better on their return on capital employed. Again, we want growing free cash flow. Now, this is a bit of a turnaround play, so this one is not going to look as good as some of the others. December 2022, $12.4 billion. Huge drop in December 2023 to $6 billion. Further drop in 2024 to $4.5 billion. And they are showing the trailing 12 months just matching what they had last year. So I should have just scrolled over and went back to 2021, but that's all right. Repurchase of capital shares, $3 billion in 2022, $3.4 billion in 2023, $27 million in 2024. So the numbers on this one for free cash flow and return on capital employed are not as nice as some of the others, but this is one I believe is a good turnaround play. We'll see how it shakes out. Now, I do have 234.2573 shares of this one. Again, I am down 17.25% on this one, $11,156.20 into the position. Currently, my cost basis is $47.62 per share. So again, I'd like to bring this down while it's below my cost basis, and try to bridge that gap, right? Try to get my cost basis down to the low 40s, and bring this percentage that I'm down up a little bit. Hopefully it just turns around altogether and I don't have to worry about that. But while it's under my cost basis, I want to add. So those are the four I am looking to add to my positions in May. What are you looking to buy? Would love to hear from you in the comment section down below. And what do you think of the four positions that I have decided on? Now, here are some other ones that I still think are very fairly, if not undervalued. Pfizer is very cheap right now. Genuine Parts Company, Owens Corning still, General Mills, Union Pacific, Railroad there, Chevron, Valet, Alphabet, which is Google, NextEra Energy, HPQ, and Leidos, which is another tech company. Alphabet is another one I may nibble on a little bit if it's below my cost basis as well. I mean, any position really. Chevron's not in my portfolio. No, neither is General Mills, but I think they look attractive as well. There are several others out there that are not on this board here. That are General Parts is another one not in my portfolio. NextEra Energy looks good to me under 70. So a lot of different positions out there right now that are pulled back, I think, that are good options to be taking advantage of. What are you looking to buy as we enter May here? Let me know in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the best interest community and drop a comment down below. Let me know what you think of those four positions: Occidental, Lam Research, Comcast, and why am I blanking on the fourth one? Comcast, Lam Research, and Cisco. SYY was the fourth one. Let me know what you think of those positions. Are they in your portfolio? Are you going to be buying any of them? Or are there some other ones on your list that you would like to share? Go ahead and drop in the comment section down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.